All right, Louis, we're about a minute and 15 out. I will lead us off with a quick introduction and you'll be all set to go. Looks like your mic is muted.
How
All
about now?
right.
Hear me
Audio.
now?
Yep, audio is great. All right, everyone, welcome back to Money Show's Virtual Expo. Thank you so much for logging on today. We are here with Louis Navellier, one of the Wall Street's renowned growth investment advisors. He is the founder and chairman of Navellier and Associates, a money management firm. Mr. Navellier specializes in behavioral finance and utilizes extensive quantitative and fundamental analysis to identify market-beating stocks. He's the editor of 5 investing newsletters published through Investor Place. Louis, always a pleasure. Thank you for being here. It's all yours.
Yeah, it's an honor to be here and talk to you folks. It's been a stunning earnings announcement season. Sales are coming in much stronger than expected. Earnings are coming in better than expected. But something did happen today as I talk to you. We are having a pretty serious rotation out of the market leaders and into stocks that have been lagging. So you probably see that today. Nvidia's down, Home Depot's up. Home Depot earnings results were lackluster, but their guidance was decent. So you are now in a washing machine, and this is why I don't like August. Though we had a good August till today, and this is going to continue for a while. Nvidia will be the grand finale next week, and then also Costco announces after Nvidia, and but this is a seasonally weak time of year, and the seasonal weakness continues through mid-September. I think a lot of his people just have to pay their quarterly taxes, to be candid with you. So other than that, let me go ahead and show you a few things, and I'm gonna get to a bunch of stocks here. Okay. All right, let's talk about this market landscape. Before we get to stocks, I do want you to know it's imperative we get interest rates down. And this is the 20-year Treasury ETF. And it shows that if you bought it at the wrong time in 2020, you literally lost 48.7% of your money. So it's imperative we get interest rates down. It hurts bond investing, it hurts dividend management, it's killed value management. And so rates are coming down as I talk to you today, and we're fully anticipating a Fed rate cut in September. Now, the main reason is the labor market. Christopher Waller, one of the Fed guys, went on Bloomberg for 30 minutes to explain how the labor market's broken, and he did that before the Department of Labor revised things lower. So that is what happened, and that's kind of what's going on. Okay, let's talk to you about where the 10-year Treasury is. You can see it's at 4.19. It's about to decline. So this is very, very good news. And as the Fed continues to cut rates, it's going to help quite a bit. Okay, this just shows you how we've been beating estimates. And I can't tell you how important this is. Um, is We don't normally beat by this magnitude. Okay, so here's the earnings beat and the revenue beat so far. Stunning, stunning. Again, much better than expected. Okay, now let's talk about how overbought we are. These are obviously the market and moving averages. We have the rally since April 8th that has been stunning. And but when markets get overbought, we have to back and fill a little. This is evidence of how overbought we are. And I don't want you to be upset if the markets have to consolidate because the last 4.5 months have been phenomenal. So there just comes a time we have to give a little back every now and then. And the other thing about this market you should be keenly aware of is you had to have some small caps to do well. And that really surprises a lot of people because the Magnificent Seven's been fine. But what happened is in June we had an annual Russell realignment. It actually started a little in May. And Russell has a preliminary list every month, okay, until they have a preliminary list every month at the end of a Friday until they make the final revisions. So the list was finalized on June 27th, and then on June 30th, all these stocks got added to the Russell 1000, 2000 indices, and they popped. There's going to be a second Russell realignment this year in May. Actually, not May, in November. So it's going to start in October and run through November. And so we're going to get a small cap surge there. Now, November is also the time small caps tend to get going anyway. We often have an early January effect. So I do want you to be aware that small caps have helped propel the market higher. Okay, but this is not a sector market. I have the multiple sectors of the S&P here. You can see industrials were doing good. That's building out data centers. Tech was doing okay, but it's still very narrow. And utilities, that's part of the data center thing. Obviously, we're going to have to double our utility grid to do the data centers. Now, I happen to be talking to you from Reno, Nevada now, and we have all the data centers out here. Apple and Google have been here for years. There are 13 under construction right now, 13. And these are huge facilities. They say the square footage is the same as three Empire State Buildings. And they tend to come to the desert because it's cold at night here, and it can help with the temperature control. But in a place like Boise, Idaho is also very popular. Data centers go where there's fast internet, cheap electricity, and Nevada has been very generous to the permitting, and that's that. Okay, so I want to talk to you about when the market did hit a high on February 19th. This is looks at what was working since then. And this is very confusing to people. This is the Russell 1000 sorted by all these different fundamental factors and technical factors. And essentially, there was nothing that was working. So this is an example of the rotation in the market we're in, okay? Then since the recovery on April, excuse me, uh, that was April 8th. Yeah, April 8th. That was, but I should explain to you what caused that rally. Howard Lutnick, the Commerce Secretary, who used to run Cantor Fitzgerald, and Scott Bessent, the Treasury Secretary, had a little meeting with President Trump, and they told him in a nice way that he's not in charge anymore, that somebody called the bond vigilantes are in charge because bonds weren't acting right. So they told him he had to shock the system to fix the financial markets. So he suspended the tariffs for 90 days. And he also tweeted on True Social that now is a great time to buy! Exclamation, 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 and uh, and it triggered probably the biggest one, well, biggest reversal I'll see in my lifetime. And this is what shows what was working. But if you look at the bottom one here, it's called best to worst. You can see the best performing stocks, the top decile of the Russell 1000 was only up 4.1%. The worst was up 38.16. That is still going on to this day. So this is a mean reversion rally, and there's nothing wrong with that. But I just want you to know um, that when the market broadens out and a lot of the stuff that was lagging rallies, it better come out with good earnings, otherwise it'll get shot again. So a lot of the stocks you're seeing rallying now may not sustain themselves. And of course, we've had meme stock crazes and all that stuff going on too. And this is just more evidence that if you break the Russell 1000, the best stocks weren't rallying in the second quarter. It was the worst stocks did better. Now I had a stunning second quarter because I had very good stocks with great earnings, but it was a shockingly narrow market. And growth is beating value by the biggest magnitude ever recorded, 16.3%. And here's what happens when growth beats value by at least 10%. You can see that value will continue to appreciate, growth will do better, and um, and that's that. So an example of a value stock is United Healthcare. So there are exceptions that some value stocks are getting their mojo back. Of course, United Healthcare went up on the rumblings of Buffett and some hedge fund guys were buying it. Okay, this is a good example of seasonality. We're showing charts here of how strong the market is from May to October, and then from November to April. And November to April is clearly better. Okay, so you are in the seasoning weak time of year. Do we go higher? Yes, we do go higher, but it is much better from November to April. So the weakest part of the year is now through mid-September. I think a lot of people have to sell stocks, pay their estimated taxes. That's due on September 15th, so we'll see. Okay, now I want to talk to you about deficits. In June, we had a budget surplus because of the tariff revenue. In July, we had our normal deficit again. Our tariff revenue has obviously exploded in the last 3 months, and it will be hitting 60 billion a month soon. Okay? So what's happening is um, this tariff revenue is real. When they passed the big beautiful bill through Congress, they were not allowed to use that to reconcile. But this is Howard Lutnick's fantasy. His fantasy is to collect taxes through tariffs and continue to reduce the income tax. He may not get everything he wants, but we're off to a good start. The other thing is there's at least 10% baseline tariffs on everything. Um, and then you have higher tariffs depending on what that country does to us, etc. So, like Britain is 10% tariffs. The EU is 15%. Switzerland's 39%. Okay. So, different people have different deals. Vietnam's 20, but if Vietnam sends us something from China that was subassembled in Vietnam, it's 40. So, what's happening is these tariffs are about to go up a lot. We haven't finalized Mexico, Canada, or China. There's been extensions granted. USMCA is a US Mexican Canadian agreement that was negotiated under Trump 1.0, be renegotiated next year. And then Trump is also doing foreign policy with tariffs. So what happened is how do I say it in a nice way? He doesn't like what Brazil's doing to their former president, and so he bumped them from 10% to 50% tariffs, even though we run a trade surplus with Brazil. However, he did exempt orange juice and aviation parts. Okay. The other thing, if we are going to have a crisis, it's going to be the default risk. Scott Bessett said this best. He said the top 12% of households own 88% of the stocks. He said the next 38% of households own the next 12%. And then he said the other 50% of Americans are in debt. And Dodd-Frank has been systematically destroying the banking system. If you don't have a credit score of 800 or higher, it's hard to get a loan. But they will pass you off to a private credit industry that will make you a loan at a higher rate. And just so you know, that's a big industry. You can walk into Merrill Lynch, Morgan Stanley, UBS, and they will get you an 11% yield in private credit. The only problem is they use leveraged loans, and last I looked, there was a 7.2% default rate there. So as default rates continue to rise on loans, we could have another black swan event, all triggered by private credit, a $3 trillion a year industry. That's 10% of our GDP. And but it'll cause the Fed to slash rates because they have to do that to save the banking system. So we got to keep an eye on this issue. China, in the meantime, is in a deflationary spiral. They've been in deflation since May of 2022. They're running about 3.6% annual pace now. Um, that's why the wholesale prices were so low. Now, wholesale prices did jump in July, but it was largely due to an 11.8% increase in diesel prices. California's having a war on diesel. They want green diesel. So when you refine a barrel of oil, you get diesel, you get gasoline, you get diesel, gasoline, jet fuel, asphalt, kerosene, all kinds of goodies. California wants the gasoline, they don't want the diesel. So they want diesel made from organic things like bird poop from the chicken things and the organic waste. So diesel costs have skyrocketed out west, and that caused an increase in PPI. Now that that's happened, we do expect that we'll continue to import deflation from China, and we do expect that China's going to have to devalue their currency. Their rates are lower than Japan. They're just a mess right now. The Bank of England just cut. It was a bit of a testy thing, but we'll see. Now, what's happening in Asia as well as Northern Europe? This doesn't apply to Portugal or Spain, but there's a demographic decline because no one had enough babies. And believe it or not, Japan has the highest birth rate in Asia, but not enough to replace their population. You would think it would be, Indonesia, Malaysia, someplace like that. No. J- j- um, Everybody's not having kids, okay? And so you're losing households in a lot of these countries, and you can only fix it with orderly immigration. The only problem is they don't have immigration in Asia, and in Northern Europe, they're not assimilating the immigrants anymore. They're having problems with them in Germany and France and Britain, etc. So what's happened is there's this thing called a class of civilizations going on, and you just can't grow unless you create new households. Now, here in America, we're pro-family. The South is pro-family. The Mountain West is pro-family. We are not quite at the replacement rate, but we're trying. We also assimilate our immigrants. Like most of them come here to work. Obviously, Trump wants them to have green cards. That's the only change underway. So we should lead the world here soon. Brazil has deficit is 11% of GDP. They're in a tailspin now. Lula da Silva, the president of Brazil, told everybody to stop using dollars, use Chinese yuan, even though it's depreciating. There's another reason why Lula da Silva and Trump just don't get along. And Trump is really hurting them now with the 50% tariffs on everything except orange juice and aviation parts. So there's going to be some real issues around the globe. But the U.S. is the oasis, and uh, money should be coming here as rates continue to collapse around the globe. That foreign money coming in will put downward pressure on us. And Neil Kashari is a very respected guy. He's the Minneapolis Fed president. He became the fifth FOMC member to call for a rate cut. So, and Neil Kashari used to run the TARP program under Hank Paulson, so he's used to managing financial crises. So the bottom line is, if we don't have a black swan event from private credit, we'll probably be okay. But that is a wild card out there. I need to keep you posted on. So, what we do at Navalier is we try to empower you. We give you our stock grader for free, and you can key in any stock, and that's how it performs. These charts are SEC compliant. We actually lower the returns by 1.75% a year because the SEC considers this advertising. I do want you to be aware that my actual performance is even better than these charts. And I want to tell you my fundamental grade is doing the best of any of my grading skills. And you can see a fundamental A, B, C, D, and F are quite extra. That's how they perform, and the fundamental A's are extraordinary. And this is my last test of our stock grader. We test at the end of each quarterly earnings season. So we test at the end of February, we test at the end of May, we'll test again at the end of August this month. But when we did the last test, you can see the top 25 bar graphs, top 25 are the place to be. The fundamental model, the top 45 are the place to be. But if you can get in that top 5% or 10% of the quant here, you can have extraordinary returns. And this has been our best year in 25 years because our model's been working so well. So here's the fundamental A stocks are my best creation. These are stocks in the top 20% of sales growth, margin expansion, earnings stability, earnings momentum, cash flow, return on equity, analyst earnings revisions, earnings surprises, and of course, analyst earnings revisions. So I'm going to give you my fundamental A stocks in a moment, but before I do, I just want to review what we're doing. I'm very proud that we're a very good risk-adjusted manager, and the reason we are is we calculate something called alpha. Alpha's return uncorrelated the market. My whole thing is high alpha, low beta, low volatility. So what causes the alpha is usually persistent institutional buying pressure, uh, constant analyst upgrades, more institutional money pouring in the stock, driving it higher. That institutional buying pressure doesn't last forever. The stock will get more volatile, and then it'll get downgraded in my system. But we're really into finding stocks that are being institutionalized at a fast pace. Then we do our fundamentals, and most of the time when we analyze the stock fundamentally, we get this little orange chart in the lower right. This means we get, let's just say this is price to sales. The pattern's kind of erratic. We don't want this factor. We want something like this. Let's say this is cash flow or earnings momentum. We want to find fundamental factors that decay as the grades decay. And we found 8. We blend them together to build a supermodel. We're static with it. One last thing about what we do is we like to put about 60% of your money in conservative stocks, about 30% in medium risk, and about 10% in high risk stocks. So risk to me isn't the angle of a stock's in, it's dispersion. And we like to blend the stocks together so we get a high alpha and low beta. Now we do that by having some covariance stocks. Like I have a lot of gold stocks, 5 of them. And the reason I have them is when the market's having a correction, they often go the opposite way. But what's safe today often wanders further out to the right and becomes more volatile as institutional buying pressure ebbs. So sometimes we'll trim a stock as it becomes increasingly volatile. This is all computer generated, and basically the computer stocks the squiggly lines and tries to combine them to make a smooth line. Okay, the fundamental A stocks are the best stocks we have. So here's examples of some of them. Philbro Animal Health. They keep all the animals healthy, the chickens, the farm animals. They make all kinds of, you're going to inoculate the animals so they don't get sick, as is doing incredibly well now. Another one we're very proud of is Zim Integrated Shipping. There is a potential company wants to take this one private at $20 a share. So we'll see if it gets acquired. That report came out recently and it was in Hebrew, so I couldn't read it, so I apologize. Another one here is King Cross Gold. This one's actually down sharply today. Goodbye. Gold is surging because a lot of people don't trust the central banks. It's not just us, it's all around the world. And so gold's doing amazingly well this year. Wilden Group is gets a lot of government contracts, and they've gotten quite a few here recently and been extraordinary. Another one is Power Solutions, which is blowout earnings. It's actually down today. Phenomenal buy here at this moment. This helps build out the oil and energy infrastructure. You know, we're having this boom for natural gas pipelines, midstream, LNG, and that's the energy boom, and a lot more natural gas drilling. They also help with all the data centers and things. Planetary Technology is down very sharply today. This is a defense contractor. There's a lot of short sellers that are trying to prick the stock's bubble. They did prick it today, but I do want you to know it's a phenomenal stock. That's redoing all our intelligence agencies. Obviously, it's friends with the administration, and it was really founded by Peter Thiel. This guy, Alex Karp, is running it. Peter Thiel and Alex Karp are Germans, just so you know, but they're Germans living in America and growing and prospering. Okay, Prodax makes all kinds of orthopedic and dental drills and things. Uh, Very good stock. Carvana, used car prices are up. This stock is down today, but very, very good stock. All right, now if you want to try any of my services, recommend you start with Growth Investor. It's not a very expensive letter. It's usually $49 for my publisher. And we are doing phenomenally well in this service. Elbit Systems is an Israeli defense contractor, just had blowout earnings. Um, uh, got a bunch of orders in recently. You can see that stock's appreciating in a very smooth, steady manner. That's our number one ranked stock in Growth Investor now. Boston Scientific makes all obviously kind of heart devices to keep us healthy, cardiovascular devices. It's doing fine. Here's another gold stock, AEM. It'll be highly sensitive to the price of gold, but you can see it's appreciated steadily. Here's another gold stock, AGI. Again, I'm holding gold because not only is the metal going up, but it also zigs when the market zags most of the time. Howmet Aerospace, obviously, they make all kinds of great components for aviation, titanium, all kinds of stuff. Looking very good. It's one of many aviation-related companies I have. Nvidia is over 16% of our portfolios. I don't intend to sell it. This is my second time in Nvidia. The first time I was up over 1,000%. This time I'm up over 4,000%. So I am planning to hold the stock through the end of the decade. They dominate all the AI chips and they're doing amazingly well. This is a new stock we added. Came out with good earnings, gapped up here the other day. So this is an ADR. But this is when you have this big machine to data mine the stocks, as an example of what's coming up. Comfort Systems really helps the build out of the data centers. This is the commercial air conditioning, HVAC stuff, doing amazingly well. Guidewire Software is doing very good. I'm very comfortable with the stock. App Loving, volatile stock, but a good stock. So, my goal here today was to empower you. So, let's just discuss what I recommend you do. First thing I recommend you do is you go to www.navler.com, click on services, and subscribe to Navler Market Mail. That's myself and four other people every week. We comment on the markets. It's very long, it's very extensive, but take advantage of it. It's free commentary. Our stock grader is on Navler's website. It's free too. I personally like my publisher's software a little bit better to run stock grader. Another service you want to look at is Navler Market Buzz. That is us on YouTube, a YouTube channel that my daughter started. Very, very popular. Obviously, she's going to succeed me here soon. And she's doing an amazingly good job. So, Navler Market Buzz is weekly, Navler Market Mail is weekly. We also, once you sign up for Navler Market Mail, you'll get our podcasts and all that kind of stuff. But I'm here to empower you. Okay. I'm here to make you rich. A little bit about us. We're a family office based in Reno, Nevada. Um, we run over $1 billion. My family's one of the largest clients. So we are just trying to compound everybody's money at a good clip. You can see a lot of the stocks I buy are not normal stocks. So I used to be in all these broker-dealer platforms. I sold that business back in 2013 to concentrate on taking care of friends and family because I was approaching my liquidity limit, especially in the small cap stocks. So that's what we are. We take care of friends and family, try to compound everybody's money. You can use our newsletters, or you can have us manage it if you wish. We are not for profit on management, so you'll find our fees are like about 60% of what Fisher charges, and we're one of the few managers that will work for a percent of profits billable annually. So we won't even bill you unless we make you money. So either we're good or we're stupid. I'll let you decide. And are there any questions that showed up as I was talking?
All right, Louis, thanks so much. We had a viewer here. They're wondering, they're saying, what percentage of the trading volume these days do you think is due to retail investors versus institutions?
I think retail's kind of got its mojo back a bit. I would say they're probably up to about 22 to 25%. Obviously, the institutions are dominating all the index products, including ETFs. There are more ETFs than stocks. Um, but no, the individuals gotten their mojo back. Schwab and other discount brokers have done a very good job trying to get people excited.
All right, thank you. We had another viewer that they're wondering if you had any thoughts on India and their economy.
Yeah, well, obviously President Trump's having a fight with India right now. He told them to stop buying Russian oil, and India, of course, buys Russian oil because it's set up to refine it. It's heavy sour crude, and only they can refine it. And then they sell all the refined products, jet fuel, diesel, everything all over the world. And Trump just told them knock it off and stop doing it. Well, they're not going to do that because they've been trading with Russia for centuries. But this is part of what Trump's doing to Russia to make their life difficult. He's trying to put pressure on India and China, who do a lot of business with Russia. And that's maybe why Vladimir Putin wanted to meet him, or maybe he wants to end the war. We'll see. But I do not have any Indian stocks right now. I do monitor the ones that trade here in the States. India does have better demographics than the rest of the world. So they are definitely creating households and all. But I do not have any Indian ADRs. Um, and I never really seen them do that well when I've had them. I've had Dr. Reddy and things like that in the past, but I don't have any right now.
All right, thank you. We have time for one more here. It looks like a question came in. Do you have a service for new millennials trying to get into the stock market today to guide them, or what are your recommendations?
I would definitely sign up for Navler Market Mail, and I would definitely try to buy monopolistic stocks you understand. Most millennials understand Nvidia because they make the graphics processing units that are done in all of the video games, and of course, they've made those extra big for AI in the data centers. But the key to making a lot of money is to buy monopolies that dominate their business. And in America, we have legal monopolies. Google's a monopoly, although the Justice Department is trying to get them to spin off their Chrome division. Apple's clearly a monopoly. Okay, so is Microsoft. So is Netflix. So is Meta. Um, so, there's a reason they suck up to whoever's elected because they want to protect their monopolies. Okay. And if you can invest in these monopolies, you can make a lot of money. And but I would Nvidia right now is the best one by far.
All right, Louis, thank you so much for joining us as always. Greatly appreciate it. And thank you again for taking your time out. And I believe you'll be joining us in Orlando. Is that correct?
Yeah, yeah, yeah. I think it's coming up here pretty quick, October, I think, right?
Perfect. Yep. So everyone be
Okay.
sure to check that out. Visit moneyshow.com for more information. Thank you again, Louis. We greatly appreciate you.
Take care.
All right, bye. All right, everyone, and a big thank you to all of those in attendance. You're watching Money Show's virtual expo. Stick around. We have more great content coming your way, just like you heard from Louis Navalier here. So thanks again. We'll be right back with you.